What if Bitcoin is standing at the edge of a move so massive? Most people won't see it coming until it's too late. Bitcoin is showing signs of pressure nobody expected. US spot Bitcoin ETFs have just seen over $2.26 billion in outflows in only 14 days. The institutional demand everyone believed would never stop is suddenly weakening. Even giants like BlackRock are flashing warning signs. But here's where it gets interesting. Some experts believe this could be the beginning of a deeper crash. Others think Bitcoin is simply coiling up before one of the biggest breakouts in crypto history. So what's actually happening? The numbers are stark. Over the past 2 weeks, US spot Bitcoin ETFs have hemorrhaged $2.26 billion. This isn't just a blip. It's the largest weekly outflow since January, signaling a significant shift in institutional sentiment. BlackRock's IBIT, once a symbol of unwavering institutional adoption, recently recorded its second-largest daily outflow of $528 million. The narrative of permanent institutional demand now appears to be cracking, with analysts describing it as structurally weakening. For years, Michael Saylor, the visionary behind Strategy Incorporated, championed a never-sell Bitcoin philosophy. His unwavering conviction made him a titan in the crypto world. But even Saylor is now hinting at a potential shift, stating it's not unlikely they might sell some Bitcoin by the end of 2026, and is reportedly looking at buying bonds. This pivot from one of Bitcoin's staunchest advocates sends ripples of uncertainty through the market. Adding to the pressure are broader macroeconomic headwinds. The Federal Reserve continues to hold interest rates steady at 3.50% to 3.75%. with no cuts expected in 2026. Rising Treasury yields are making traditional investments more attractive, pulling capital away from risk assets like crypto. Persistent inflation concerns further compel the Fed to maintain a higher-for-longer stance, creating a challenging environment for Bitcoin. Despite the institutional outflows, on-chain data presents a fascinating paradox. Bitcoin exchange reserves have hit a 7-year low, with approximately 2.43 million BTC held on centralized exchanges. This scarcity could still set the stage for a supply shock. However, whale balances are contracting at their fastest pace of 2026, indicating a cautious stance from large holders. Currently, Bitcoin's price action appears trapped in a compressed setup. It's almost like a spring being pulled tighter and tighter, oscillating between critical support and resistance levels, particularly around the $72,000 mark. This tight consolidation suggests an imminent, explosive move in one direction or the other. So, is Bitcoin preparing for a major breakdown, or a breakout nobody sees coming? Key price levels to watch are the $72,000 support and the $77,000 resistance. Bullish catalysts such as clearer crypto regulation could reignite institutional interest and bring a fresh wave of capital back into the market. The next few weeks could decide Bitcoin's future for the rest of the year. One move could shock the entire market, and by the time everyone notices, it may already be too late. Do you think Bitcoin is about to crash or explode higher? Comment your prediction below.